All right, everyone, here we are with ticker symbol RKT, Rocket Companies Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. And to all my subscribers, welcome back, and let's jump into this chart. So Rocket Companies has been in a bullish run. I mean, it keeps breaking through resistance levels and holding below the support levels, right? Leaving them behind and reaching newer highs. After that low here of 1781, that was a steal. Anybody that wants to comment down below if they got a chance to get in at this point, or they were able to actually get in somewhere around this area once they got confirmation of it being over the 50-day moving average and started to continue to ride this as it's been moving up. I would love to see your comments down below, or what you guys thought about this being at below IPO price. I mean, that was phenomenal for any investor that is long or believes in rocket companies. I mean, that was some interesting stuff. And here we are currently with the 50-day moving average below at 2032. As long as we're above it, the bulls are in control. The moment we're below it, the bears are in control. So we're going to move our resistance levels and support to their new location. But some important numbers are going to be shown here in just a moment. And I'm going to do a trivia question at the end of this video. So I want you guys to stay tuned till the end, because I will ask it. And it's a really important point, because when I do these trivia questions, it's usually numbers or cues on the chart that you want to keep in mind for the next coming weeks or even next coming days. So stay tuned, and it really helps other investors that are viewing this and didn't get a chance to catch it, or they were writing other things, because as you guys write down these points of reference, which I suggest highly, don't just watch through the video, you may have missed it. So I don't want anybody to overlook these things, and I want to do these trivia questions so that anybody that wants to participate, you're more than welcome to comment down below. And then that way everybody is on the same page. So stay tuned for that. So let's go ahead and get our support to its new location and our resistance to its new location. So we're going to look at this very narrow, and then I'm going to talk about this a little bit broader. So we already broke through one of the most important resistance levels in this whole downward trend since obviously the 23rd of October, and even since the 20th it was dipping and it came back up, and that high was 2105. That was probably one of the highest points before it continued to hit new lows, and after falling for quite some time, for a few days, and then it spiked back up. It broke through the 50-day moving average, and then it kind of just started to fall again. It tried coming back up, and then that's when we saw this hit new lows and also below IPO pricing. So I also want to see what you guys think about that. Don't forget that I asked that question earlier, and I want you guys to go ahead and comment down below. What was your thought when you saw that? Did you think that was good or bad? Like, I just want to see everybody's different reactions and perspectives based off the chart and what they feel when they saw such a great price or such a bad price because it was below IPO, depending on how you looked at it. So it broke through that 2105 mark. We're at 2124. The 50-day moving average is way down here at 2032, but this is catching up to the price. So we're going to look at this closely now. So the resistance level is the most important number right now for the bulls. The bulls want to break through this number, and that's 2156. That's the highest point reached in this run and today. And also it is important because if the bulls can't break through this 50-day moving average could catch up to it, giving leverage to the bears. So 2156, super important for every single investor to keep in mind that the bulls have to break through this. They need to break through 2156, turn it into a support, and pull further away from the 50-day moving average in an upward direction. So I want to emphasize that the bulls need to break through 2156. Now, on the other hand, we have what the bears want. The bears want to break through this support, and this support level is 2083. 2083 is significant because if it gets broken through, I want to suggest to all investors, pay close attention to how this stock is reacting and how quickly is it hitting newer lows, or are the bulls trying to reappear in between 2083 and the 50-day moving average to bring this back up? Because keep in mind, this support level here, we're still in bullish territory. We still haven't fallen into bearish territory, but that is the first catalyst or the first step for the bears to take this leverage away from the bulls, bring this in a downward trend, break through the 50-day moving average, and get into bearish territory. So super important to keep that in mind. So I want to emphasize, pay close attention to how this is behaving. Put your 1 minute, your 5 minute, your 15-minute chart frames. Look at the inflow and the outflow of the chart and see who is dominating the chart. And if by any chance this is hanging out sideways, the 50-day moving average will be catching up to the price and continue in this upward trend. And if this is just hanging out sideways, this is why I'm saying that the bulls need to take this up and break through this resistance to go ahead and start a staircase effect and get up to the next level, the new resistance levels and the newer highs. So pay close attention to that. But if this was to work sideways, the 50-day moving average will be catching up to the price, which could give leverage to the bears. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community. And don't forget to hit that like button to let me know you watched this video. So trivia question. What is the most important point right now for the bulls and why is it important? I'm going to repeat that. What is the most important point of reference right now that the bulls need to break through, and what number is that on the chart, and why is it important? I look forward to seeing your guys' answers down below and comments down below. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens. For the most part, not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28 and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.